There.
I'm going to move farther.
No, we were perfect.
Now we're perfect.
No, now we're off center. Now I have to move over here. Hang on.
Hold on, I'll clap.
We're not recording yet.
Oh.
Hi.
Happy Easter.
Happy. Hi.
Hi everyone. And thank you for...
Hi, everyone, and welcome
to the Paul...
We always have it right. Why can't we do it this time?
Happy Easter.
We always do it perfectly.
Don't we want to start? Wait, don't we want to start with something? You got this hair in your face, and it's totally distracting me.
We start every episode the same, and we always are in sync for the first bit.
No, we got to do a little bit.
This is the first time in like 30 episodes that we haven't been in sync.
30 years. We got to do a bit first. Where we
don't do a bit. That was the bit. Is you said Happy Easter, and then I jumped right into the intro. You still have a hair.
Okay, I'm getting distracted by all your hairs in your face.
Hey.
Hi, everyone, and welcome to the Call Girls Investment Club podcast. Yay. Okay, I got to tell you, when I lose money, I don't want to do a podcast, and when I make money, I do.
I've noticed that, yes.
Do you feel the same way?
No, I don't have enough money to lose or gain where it feels meaningful to talk about, so I just talk in percents.
I'm like crying, so I was laughing so hard a minute ago.
So I made money this week.
Yeah.
I invested in D. The big D.
I'm the big D. Diana. That's me. You bought what?
I bought Dominion Energy because it is a stable stock.
I printed it for you.
It is
that's 5 days.
It goes back and forth a bit between being up high and being down low. And I figured,
Where'd you buy it on that chart? That's 5 days.
Places.
Did you buy it before? Did you buy it before last week?
I bought options on Tuesday.
Right at that dip?
Yeah.
That big dip?
And then
That's great. And then it went way up right here. What is that, like Wednesday?
I bought some more options here, I think.
End of Thursday?
Yeah.
I keep forgetting Thursday was Friday this week.
Yeah.
Because of the holiday.
Yeah. Well, maybe it was around here.
I was kind of leery about this week because I knew it was a holiday week, and I knew people would sell. If people are going to sell off before a 3-day weekend, they do it on Thursday.
Right. I bought here. I don't know if you can.
You know what I'll do? I'll put a chart on YouTube with a little arrow there.
Okay, cool. And you will know what I'm talking about.
Okay, so why did you buy? Okay, first of all, I read an article that said boomers love Dominion Energy and why Zoomers will never buy it. And you're a Zoomer and you bought it, and I'm a Boomer, and I was like, why are you buying that?
Well, the thing about it is I was like, okay, you know what? I just want a good dividend stock because Mom was talking about how she wishes that if she made $1 million in the stock market, she'd just buy dividend stocks. And I was like, well, I only have $1,000, but I might as well look into this and see. Because I was like, I'm tired of losing money. I want to take low risk. And so I just bought regular stock in Dominion, and it went up. And then I realized, oh, wait, this is a super stable stock. And in the stock market in general, stocks tend to go up on Monday, down on Tuesday, and then they go up a little bit until they hit Friday, and then they go down again.
Usually
that's the pattern.
2/3 of the time.
And I figured, why don't I just buy options on Friday and wait until Monday? And then I figured, well, okay, if I'm going to buy options on Friday, I might as well also buy on Tuesday or something. And I did that, and I haven't sold yet. But next Monday, if it goes up, I'll sell. The options are really long-term, like 2 months out in the future.
Yeah, that's a little more... That is more comforting, to be involved in something like that. You
don't
get pressured into selling.
My advice for anyone trading options, don't buy options. Like, get rid of your options once it starts hitting 2 weeks away from the strike price.
Yeah, that's cutting it really close.
That's when... Because up until that point, the amount of time doesn't really affect the price of the option. Once you hit that 2-week mark, then as time goes on, the option gets cheaper because it's getting closer to the actual worth of the stock.
You know what I'm really impressed by is you're gaming this like a game.
That's how I understand it.
You're an expert on gaming, and you got it. And just think,
stock market's
30
just a
weeks,
game.
Remember 30 weeks ago, I was like, I really want you to get involved in the stock market. And you're like, oh, okay, well, I don't really, but I'll sit in your podcast.
Well, the problem is it's a game that requires you to sink hundreds of hours into it until it gets fun.
Until it gets fun. It gets fun when you make money. So you bought stock first, and then you got that idea about trading the options on the swings.
Right.
And you also said you saw a pattern in Dominion. This is an oil and gas company.
I don't know if it's a pattern. I don't want to use that word ever since Corsair destroyed me.
Oh, yeah.
I would say that it tends to trend up and down between this large mark point on like a 5-year period. Like more like 3 years. Like there's a 3-year period to it, kind of. And I figured that right now, in general, it seems to be heading up.
Also,
over the course of the year.
Also, I'm a lazy bum and I don't research my own companies, so I just go off of what some experts on CNBC say.
I just look at the charts. I don't even really look into the news.
But you wouldn't buy a dog company. Dominion is liked by Kramer, recommended by Kramer.
Yeah, that's what got me interested in first is I was looking for a list of stocks that Kramer likes that are dividend stocks.
Oh, you did that? That's how you found it?
That's how I found it.
That's great. That's great. And then I looked up Dominion just to see if Kramer liked it. And it was this long page of 5 years of arrows up, arrows up, arrows up, all the way down from Kramer. He just consistently liked it for 5 years or more.
Yeah.
I couldn't believe it was 5 years
maybe he only
old.
mentions it when he likes it. Maybe only
Well, that's a
it's
thought.
going up.
Yeah.
But
he doesn't tell people ever to get out of it. Well, that's good. So you made 10% on your entire portfolio in a week, right?
Well, maybe. I don't know. That going up at the end there might be a fluke. We'll have to wait until Monday and see where the opening price is, and then we'll see if it goes up on Monday, and then I'll sell it if it goes up on Monday.
I did notice Robinhood does a strange thing because I made 43% last week, and I know what it is. When you look at your weekly return on Robinhood, it goes back a week. So every day I've been looking at it and trying to get a screenshot of the 43%, which I got. But then today I looked at it and it said I made 33%. But that's because it counted a day later.
Oh.
Right? Because it's 5 days back or whatever, 7 days.
Huh.
Yeah.
I think the fact that Friday was skipped this week is screwing with the system.
Yeah, and also Monday fell off of the week of returns.
Oh, no.
Friday did. I made money on Friday or something. I don't know. Yeah, I made money on Boeing. Okay, so...
Also, if you take money out of your Robinhood account, that fucks with the chart a little as well.
Oh, yeah. You could add money and it says, oh, you made a great return.
It doesn't actually. It doesn't change. It's weird. I've noticed this because when I add money, it doesn't change the returns chart, but it fucks with it.
Really?
It doesn't directly say, oh, you made money because you added more money to your account.
You know what that might be is when you add money to your account, it takes 3 days for them to actually give it to you.
I don't know if that's it. I don't think it's that. I think
so they give you half of it and then they bankroll half of it. And then...
It doesn't change your percent. It doesn't change your gains, but it changes how they look percentage-wise in terms of your full account balance. So if you add money, it'll look like you made less percent.
Right. Oh, that is bad.
Yeah.
Because I like to see that I made a lot of money. It encourages me to go on.
Yeah, if you keep adding money to it, it'll say you made less percent.
Well, last week I talked about how I was under this pressure all the time to not exceed my day trade limit. And that was influencing my decisions. And I'd be in something for the day, and then I'd stay overnight because I had to do that. And then the next day it would be down and I'd lose money, right?
Right.
So I had like a light bulb go off in my head like an idiot. I just decided I should have figured this out long ago, but I keep forgetting things I learned. But I just decided I'll just do three trades a week. And I'll only get in if I have power to day trade and sell. Like when I decide I'm wrong, get out,
Right. So
I implemented that. And then also Dylan said something to me about, oh, you have fear of missing out or something.
Yeah, you do. You have that big time.
I do have that pretty bad. It's my flaw. It's my thought.
Well, I think everyone has a little bit of a fear of missing out, But I think that when
Mine
the
has
stock
been
market
bad.
happens, having that fear and acting on it is deadly.
Yeah, it's been
It
deadly.
is super bad because once something has already happened and you get back in, it's just going to go down.
Yeah, I have very deadly
In the stock market, when something big happens, it usually swings back the opposite way, at least a little bit.
Right. So I've made a lot of money in the past, and I've lost a lot of money in the past. And I remember since I was a child having a fear of missing out. Like, I would be sleeping in the back of the car on vacation, and my mom would be like, look at that. And I could not sleep. I'd be popping up. I got to see what it is, you know?
Right.
I don't know if it's a personality trait, but I remembered it. And during the week, I held it in and I acted appropriately. And I made 43%, which is 1 week. I'm not talking about a trade where I made 43%. I'm talking about my entire portfolio went up 43%. And the funny thing is, this is the chart I made of the 5 trades I made for the week. And they don't, like, my return was 4% on Johnson & Johnson. Remember, last week I'll just go through them one at a time. Last week we were talking about Johnson & Johnson being the only shot I wanted you to get. Right? I was adamant about that. I don't want to get the mRNA shots. Of course, I'm being laughed at by relatives of mine who think I'm, somehow tainted by my political beliefs or whatever. I just did research, and that's what I want. And then you said, why don't you buy the stock? And then so I got in, and that day it went up, but I was constrained by my day trading, I think, and I stayed in over the weekend. No, it wasn't that. I was not educated about the flaws in the Johnson & Johnson shot until the weekend. I was in it. It was the weekend. I started reading more stuff about it, and I thought, oh, no, I don't think this is a good idea. And I did bring this up in the last podcast. So Monday morning, first thing, I sold it.
And then it went up on Monday.
Well, no, I misspoke. So I don't think it went up on Monday. Did it go
I
up?
remember you telling me to sell it, and then I sold it.
And then it went up.
And then it went up.
Okay, so if we had held it for the whole week, I did a chart of all these trades, about my fear of missing out and what I missed. So Johnson & Johnson for the whole week, at its high, if I would have held on to it, I could have made a maximum of 3%. So that's not congruent with this 4%. Oh, I know why I made 4%. I was trading options.
Okay.
The stock went up 3%. The option I had, if I had stayed in till the end of the week, I would have lost 33%.
Yep, that's options. Stock goes up, money go down.
Okay, so then that Monday, the way I was making decisions is I'm thinking, is the general market going up? Is the general industry this is in going up? Is there some kind of trigger or catalyst that's making it pop into the consciousness of other investors? And also in my subconscious, I recognize company names that I've heard Kramer talk about in the past as being well managed. So, and also if Kramer talks about it, I know it's one of his picks.
Right.
So Tuesday morning, so I sold Johnson & Johnson Monday, and I was like, I don't have any more day trades. I'm just going to sit it out. So I sat it out. Tuesday morning, Boeing. He's talking about Boeing at 5 a.m. It really pays to get up at 5 a.m.
It does.
He says little things, and he's got inside information that he doesn't say, but you can kind of hear it in his voice when he knows what's up. And he's like, Boeing wasn't an inside information tip. It was sort of a, I don't know why anyone wouldn't own Boeing. And Boeing was down that day. So I was also looking at the stocks and seeing if they were low for their general range. So I bought Boeing, but I lost 1% on my trade.
Did you buy stock or options?
Options. So
I think you should buy stock in Boeing. I don't think that's a very short term.
Yeah, I
gain.
realized that the next day. I was like, well, this isn't the reason I sold, even though it was going up, because, okay, if I had stayed in it, the stock of Boeing went up 3% for the week. The option that I had would have lost 20%. Okay. Well, I got out because I thought this isn't moving fast enough for me. This is just a fuddy-duddy kind of investment, and I'm not an investor. I'm a trader.
I'm an investor.
Yeah, isn't that ironic? And if you own your, what is that? If you own your Dominion stock long enough, they'll pay you to own it.
That's true.
That's what
but
the beauty of
I don't have
dividends.
enough money in it to get.
You'll
big
probably get
results.
1 cent. Yeah.
Once I get a lot of money in it, that's when the big money comes in.
Yeah.
Yeah.
So Carvana. He also mentioned Carvana that day. I'm not sure what time of day I bought Carvana, but I thought, why am I putting... I kind of got crazy about Boeing, and I couldn't figure out anything else to buy. So I put 77% of what I had into Boeing, and then it just kind of sat there, and I was like, why am I doing this? This is not my style. So I sold half of it, and I put it in Carvana.
Now, once you make a lot of money, let's remember to get dividend stocks.
Yeah. So I sold half of it and got Carvana. And then I was like, why am I even in the other half of this? I should sell it. And I looked and, no more day trades. Gotta wait. So I was stuck in Boeing until the next day. So I bought half of the investment I made in Carvana. Then I bought the second half the next day. So Carvana, I made 19%. So that was decent. I made 4%, I lost 1%, and then I made 19%. Okay, so the stock of Carvana went up 12% if you would have saved it all week. So that stock itself just went nuts. If I had stayed in that option, I would have only made 7%. Isn't that weird? By Friday. I believe it's because the option might have... I don't know.
How long term were you buying these options at?
So this was like 2-week options on all of these.
That's what I'm telling you. It's the 2-week barrier.
Right, and I'm the one who warned you about that. But
I'm telling you right now, it's 2 weeks. You gotta buy options further out.
Okay, they're 2 weeks now. When I bought these, they were almost 3 weeks.
Okay, well then never mind.
That's why I was trading them last week. So next week I'll be buying, instead of the 4/16 options, I'll be buying, the week later.
Right.
4/22 or whatever. Okay, so then Carvana I sold with that profit. I wanted to stay in it, but I thought, no, I've made enough money. I'm going to take it and get out and not worry about what I missed. So I took it and got out, and I watched it climb. And I don't think this option number is right. If the high, I don't have the high of what the option was worth at the high during the week. But I'm sure I could have made more. But I thought, 19% is a really good target. I aim for 20% return on each investment. If I make 20%,
that's a big target.
It's huge. So I thought, okay, I'm taking this, I'm getting out. And since I had been more controlled, I didn't invest 70% of my whole portfolio in it. I invested a total of 50%.
Right. Which is still a big number for some people. I'm
trying to be a little smarter. But if you can make 20% return on 50% of your portfolio, that's 10% of your whole that's right there.
Yeah.
That's a lot.
That's a lot.
So then, now my portfolio is worth more, but I'm only investing 50% still.
Okay.
So Wednesday, I had 2 ideas, and I did 50% and 50%. I just went all in. Because I don't know why. I just thought, this is the last day of the week where it's really going to go up. Tomorrow it's going to go down. So I bought very conservative options. I bought prices that were in the money. They weren't hugely conservative at all, but I bought Spotify and Twilio. Spotify, I know what it is. It's all these podcasts we're doing. Spotify is benefiting from the growing industry in podcasts. Everybody is getting into the podcast. But the main thing is the audience for podcasts is growing because people are staying home. They're doing
Well, Spotify isn't just podcasts, it's also music.
Yeah. It's a lot of things. But that's all I know about it. Mm-hmm. And I know it's well managed because Kramer touted it, and he vets these companies. So I made a 25% return on that investment in one day. I bought it Wednesday and I sold it Thursday.
That's a lot.
Yeah. That's why I like options.
Options are fun when they work.
So Spotify went up 5%, which 5% is way bigger than most of these. Carvana went up 12%, but 5% is way bigger than these. Twilio went up 9%, but I just...
Good job.
I just took 25% on options. That's the stock went up that much. That's huge.
You did a good job this week.
Yeah, so I missed out. So what did I miss out?
You didn't miss out on nothing. You made money.
I missed out on losing 6% on Spotify and losing 12% on Twilio.
Well, look at that.
Yeah. So basically, you know why these prices, these are higher than the ending price? That's the high during the whole period. That's the high. That's the most that the stock went up. But at the end of the day on Friday, which was Thursday, they went down.
Nice.
I could have lost 12%. That's how much I missed out on. But instead, I made 33% on Twilio.
Nice.
So I used half my money.
Nice.
On both of those. So that's 10% I made on Carvana. I made 20% with half my money. 25% I made on Spotify with half my money is 12%. So that's 22. And then I made half of 33%. So that's 30, 40. And then I just double checked my math. I made 43%.
Cool.
But it was hard watching these go up more. So I was like, okay, I'm turning off the radio. I'm not going to look. And I dealt with my fear of missing out. Now that I've done this and I see I didn't miss anything. Look at that. I only would have, if I held on until Friday, the only thing I would have made money in is Carvana. The rest of these would have all gone way down.
Yeah.
33%, 20%, 6%, 12% I would have lost on all those other ones.
Good job.
So that makes me able next week to say, I'm not afraid of missing out on losing 33%.
Yeah, don't be afraid to sit it out.
So, I also printed these. These are the boxes that show the period I was in these stocks. So here's Johnson & Johnson.
Nice.
It went up, but I lost money on it. Oh, actually, I made 4%, but...
It went up, but I lost my... Oh, actually, I made money.
But I was in it for such a brief period.
That's fine.
Here's Boeing. Look what happened after I got out. I'm like disappointed. The next day, they had a huge announcement. Took off, and I missed that. But I don't care. So I lost 1%. I didn't lose money. 1% is nothing.
Nice.
So I thought, they're not doing anything. My option probably reached a great high. I can't get the option high prices because I haven't found the list of the range for every option.
Yeah, options are weird like that.
Yeah. Okay, what was the third thing I bought? Carvana. This is Carvana.
Yeah.
That was nicely done.
You would have made money there, but that's still a lot of money.
Yeah, so there's a big surge, and then as soon as it started faltering, I took it first thing in the morning the next day.
That's perfect.
The following day, there was another big surge first thing in the morning, and I just didn't participate.
That's fine.
Yeah, it's fine. I accept that I'm not going to do every move. I just need to make sure I consistently do up
You're
moves.
Consistently making money. It doesn't matter
This
if you're
week
missing
was great.
out.
This Spotify was great, though.
That's
Look at
perfect.
That. I didn't sell
perfect.
that until after that big climb.
Absolutely perfect.
Yeah, I'm really thrilled with that. I bought it before the spike on Tuesday and sold it after the spike on Wednesday.
Twilio looks good as well. That looks really good.
Or is that Thursday? I can't tell. Yeah, here, I did the same thing on this one. They were real big winners.
Perfect.
So I'm pretty happy with the self-restraint model. I have to just keep telling myself, don't succumb to fear of missing out.
You get a S ranking.
I get an A.
You get an S rank on this week.
Is this the Animal Crossing home?
No.
What is S? Satisfactory?
In Devil May Cry, it goes D, C, B, A, S, triple S.
Okay, I can get triple S after 3 weeks consistently.
Yeah, that's the smoking sexy stuff.
You know, honestly, smoking sexy stuff. Honestly,
they change what the letters stand for every game.
You know, in the past, I've done the same thing. When I'm down to a low amount of money in my account, I get serious, and I don't take chances. And then when I get a lot of money, I've made the mistake of taking chances with that money. Oh, guess what?
What?
A very close relative of mine who insulted me a lot in my phone call to him yesterday told me that nobody can make money at the stock market, that it's just gambling.
I don't think that's true.
I disagree that nobody can make money, but I agree that it's gambling. Of course it's gambling.
It's gambling. It is gambling.
Yeah. But I don't think it's... I'm not doing it for the high.
The odds are much more fair than what you'd get at a casino.
Oh my God, yes. Did you know I used to gamble at the casino?
The casino, the house always takes a cut. The stock market is a zero-sum game.
The stock market is consistently going up.
That's true.
Because of inflation, whether they acknowledge it or not.
Well, yeah, but also it's a zero-sum game in that you're making your money off of other people trading.
It's a +1 sum game.
Sure, if you look at it that way.
Well, yeah, you can look at it anyway. So we talked about all this. There was a headline about Tesla. They were saying how they shattered records with their deliveries. I don't follow Tesla stock that much anymore because I feel like it's priced real high.
Right.
There's this lady named Cathie Wood.
The food I'm cooking is starting to smell real good.
It smells like wine. It smells really...
I might have used too much wine. I'm worried about that.
Well, it'll flavor it, but it'll burn off. Don't worry.
Yeah, that's what I'm thinking.
So there's this lady named Cathie Wood. When Tesla was trading for like 200, 250, she gave it a price target of 4,000. Have you heard of this lady?
Yeah, I've heard of the 4,000 price.
Yeah, and people were laughing at her. And then she's head of ARK Management, which does ETFs, and she's not head of it, but everybody talks about her now. This week, it's been all over the news about what's Cathie Wood buying, you know? And I think the guys on Reddit follow her. But she was right about the 4,000. It just took a couple years because after the splits. We talked about that before. So this week, you know why Twilio and Spotify leaped like that at the very end?
Is it because she said something about them?
They said she was buying those two.
Oh, boy.
So I lucked out. But
you lucked out.
But when Kramer talked about them, he said something that triggered something. You know, I can just hear this in his voice, and I just know he knows something. I just know it.
Yeah.
I don't know. I think if you listen to him, you'd pick this up. I hope he never retires.
He will eventually.
Oh, no. What'll we do then? Because he knows
Become the Kramer.
He talks to everyone. Well, it's true. But I don't talk to all these executives.
Yeah, no,
I don't spend my whole day doing this. I just spend the morning for a couple hours and then I'm done.
Right.
But hopefully I'm not leading you astray thinking that you can make money at the stock market.
No, don't worry. I can make money on the stock market.
I think there's a lot of people who make money on the stock market as a living. So
I just need more money first. Can I have that?
I don't have enough to share.
Okay. Well, then I will work to get you enough to share.
So Cathie Woods is putting together this moonshot ETF. I think Twilio and Spotify are in there. I tried to research it, but supposedly she's putting together a ETF that's for space travel. And it seems like moonshot would be the name of that. But the articles I all read, nothing confirmed this, but supposedly she put some things in it that are going to the moon, but she put a bunch of random stuff like Netflix in this ETF. Exchange traded fund. So it's like those are not related to going to the moon. So why even have this ETF unless you just want to make money off of people because you're Cathie Wood?
You see the price of the stock is what's going to the moon.
Yeah, that's what I thought. When I saw Moonshot, I thought, oh, this is just going to be Reddit stocks. You know?
Let's go.
I don't know. But anyway, Spotify and Twilio are in there. But I made my money off them, so I don't know what I'm going to do next week. Go chase after them again or something. I'm just looking at current events here. The only other current events that I know about are Amazon employees peeing in bottles and Georgia passing... voting laws that all the companies...
Amazon
have you heard about
employees? No, I have not.
So I guess there was a big brouhaha and they were voting for unionizing Amazon.
Yeah.
I didn't even follow this as far as whether they won the vote
I remember seeing a post where part of the Amazon training videos was them telling employees to report anyone who was talking about unionizing. And stuff like that, and I'm like, oh my god.
I agree they're overworked because I see these Amazon guys and they're always sweating and running really fast from door to door and all that crap.
Yeah,
with
yeah.
These giant bins.
Yeah.
So I guess, I'm just using my imagination and I'm thinking they're in a hurry. They're trying to make their quota. And so they just go in the back of the truck and pee in a bottle rather than pull over and go to a restroom.
Right.
Or maybe they're afraid people will steal stuff out of their truck, so they're going to go pee in the bottle. I have to say, this is gross, but driving down the freeway, used to see bottles with yellow stuff on the side of the road, and I would point that out to you and say, somebody's peed in a bottle and thrown it out. It's a thing. Truckers have done that. That's a trucker thing.
Okay.
It's disgusting.
I think Amazon has every right to unionize, and I hope to see that they do, honestly. Because that training video made me go, okay, fuck these guys.
You know, I have mixed feelings about unions because it's an organization with people at the top who are corrupt, who get paid from the union workers' dues. You were part of a union and you didn't like it.
I didn't really like it or dislike it.
They took your money. They forced you to do stuff you didn't want to do, and they didn't give you anything in return, right?
I mean, that's true.
So there's mixed feelings I have. But Amazon did some tweet where they said nobody pees in a bottle, and then they found out people do pee in bottles. I don't know. This is just disgusting. I don't even know if I should include this in our podcast.
Anyways, thank you guys for listening.
Okay,
we're gonna
on that note, on Easter, we're gonna end on that note.
Yeah.
Okay.
Yeah, no, that's perfect.
Time for Easter dinner.
All right.
Thank you.
Thank you very much. Goodbye.
Bye.